All right, welcome to The Explainer. Today, we are diving into one of my absolute favorite trading patterns, and honestly, one of the most reliable ones out there, the pin bar. Seriously, it's just one single candlestick, but it tells you this incredible story about a potential market reversal. And trust me, by the time we're done here, you are going to start seeing it everywhere.
So, what if one candlestick could really spill the beans on the market's next move? It sounds kind of like a magic trick, right? But that's exactly the promise of the pin bar. It's a powerful clue hidden in plain sight, telling you where the price might be headed. And that's what we're going to do today. We'll break down how to spot it, and more importantly, how to actually trade it.
So, here's the game plan for today. First up, we'll get into the whole Pinocchio Bar secret. It's a cool story that makes it easy to remember. Then we'll dissect the anatomy of a pin bar, so you know exactly what you're looking for. After that, we'll talk about something called Confluence, which is really all about context. Then we get to the good stuff, the playbook for actually placing trades, and we'll wrap it all up with a really cool power combo.
Okay, let's jump right in. Section 1, the Pinocchio Bar secret. And yeah, you heard that right, Pinocchio. You're probably thinking, what on earth does a fairy tale have to do with trading? Well, it's actually the perfect way to understand the psychology of what's happening behind this pattern.
So here's the deal. The reason some people call it the Pinocchio bar is pretty clever. You see that long tail, that long wick? Think of it like Pinocchio's nose growing when he tells a lie. The market is basically lying about its direction. It makes this big, aggressive push one way, but psych, it was a total fake out. The price gets slammed right back. That long nose is the proof of the lie, and it's a huge clue that the market might be about to turn around completely.
All right, so the story makes sense, right? The market tells a lie. But how do you actually spot one of these little liars on a real live chart? Well, it all comes down to its specific anatomy. So let's get into the nitty-gritty of what it's made of.
Every single pin bar you're looking for is going to have these three parts. First, and this is the star of the show, you've got the tail, or the wick. That's the long part that's just screaming, price rejection. Then there's the body. That's the small, kind of chunky part between the open and close price. And finally, you have the nose, which is just that tiny little bit of wick on the other side. Okay, now listen up, because if you remember one thing about identifying these, this is it. This is the golden rule. That tail has to be at least 2/3 of the entire length of the bar. No exceptions. Think about it. The longer that tail, the bigger the lie, the more violent the rejection was. If it's not at least 2/3, just walk away. It's not the high-quality signal we're looking for.
So you've got two main types, and it's pretty simple. The bullish pin bar has that long tail pointing down. The story here is that sellers tried with all their might to push the price down, but they got totally rejected. Buyers stormed in and said nope, and that's a signal the price could be headed up. The bearish pin bar is just a mirror image. Long tail pointing up, buyers tried to push it to the moon, failed, and sellers took over. This one signals a potential drop.
Okay, so at this point, you can spot a picture-perfect pin bar. Awesome. But here's the thing, and this is maybe the most important part of the entire strategy. A pin bar that shows up in the middle of nowhere on your chart, it's basically worthless. Its real power, its predictive magic, comes from where it shows up. And that leads us to this huge idea called confluence. So what is confluence? It's really just a fancy word for things coming together. It's when you have 2, 3, or even more reasons for a trade, all pointing in the same direction at the exact same spot. It's like the stars are aligning for your trade. So when you see a perfect pin bar form right at a super obvious support level, bam! The signal isn't just a little bit stronger, it's exponentially stronger. It's the market screaming at you, hey, pay attention to this. So to make this super practical, here's your pre-flight checklist before you even think about pulling the trigger on a trade. Step 1, is it a real pin bar? Does it fit our rules? Step 2, are we going with the flow? Is this pin bar signaling a move in the same direction as the bigger trend? Because that's always a higher probability bet. Step 3, where is it? Is it bouncing off a key level we already identified? And last but not least, step 4, is there room to run? Does the price have a clear path, or is it about to run into a wall of traffic? Okay, check this out. This chart is a textbook example of confluence. So you can see the price is in an uptrend, right? And it starts to pull back. Now that blue area, that's a Fibonacci level, just a tool traders use to spot potential turning points. And what happens right at that key 50% line? Boom, a beautiful, perfect bullish pin bar. See, that's confluence. The fib level gives you the location to look, and the pin bar is the market giving you the signal to act. This is the kind of A-plus setup that should make your ears perk up. Okay, so we found it, our A-plus setup. It's got the perfect pin bar, it's at a key level, everything's lining up. Now what? Now we open up the playbook. This is where the rubber meets the road. How do we actually get in? Where do we get out? And how do we make sure we manage our risk?
But before we even talk about clicking the buy or sell button, we have to talk about risk. This quote from trader Justin Bennett absolutely nails it. He says his minimum for any trade is a 1-to-3 risk-to-reward ratio. All that means is for every $1 you're willing to lose, you need to have a realistic shot at making $3. This isn't just a suggestion, it's the math that keeps you in the game. With a system like that, you can literally be wrong more often than you're right and still make money. Think about that. It's everything.
All right, let's talk about how to get into the trade. You basically have two choices. The first is the break of nose entry. This is the more careful, conservative approach. You wait for the price to actually move past the pin bar's little nose, just to get that extra confirmation. The other option is the 50% retrace entry. This one's more aggressive. You try to get in at the halfway point of that long tail. The upside? A way better price. The downside? Sometimes the price just takes off without you, and your order never gets filled. And this right here, this is why that choice matters so much. Let's look at the numbers. Don't worry about pips, just think of them as points. With the safe entry, you're risking 80 points to make 90. That's a little over 1-to-1. It's okay, but it's not great. Now look at the aggressive 50% entry on the exact same trade. Your risk gets cut in half, down to 40 points, but your potential profit actually goes up to 130. And your R multiple? It skyrockets from 1.1 to over 3.25. That's the difference between a mediocre trade and a fantastic one, and it all comes down to how you enter. So just burn this into your brain. 3R. That's your number. That's your minimum target. For every dollar you risk, you're looking for $3 in return. This isn't just about this one strategy. It's about everything you do as a trader. Get this right, and you've built the foundation for a long career.
All right, for our last section, we're going to get a little advanced. We're going to look at a power combo. What happens when you combine the pin bar with another pattern to create a signal that's even more powerful and reliable?
So, this combo has two ingredients. On one side, you have the inside bar. An inside bar is basically a moment of calm, a pause. Think of it like a spring coiling up, building tension. On the other side, you have our friend the pin bar, which, as we know, is all about that sharp rejection. Put them together, and you get a really, really compelling story. And here it is, the power combo in the wild. So look at what's happening. The price is trending up, 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 and then it stalls. It forms that little inside bar. That's the market taking a breath, coiling that spring, and then what happens on the very next candle? Wham! A huge bearish pin bar with that massive tail sticking up, rejecting that key level. The story is crystal clear. The market paused, tried to go higher one last time, and got absolutely smacked down. That's about as clean a sell signal as you're ever going to find. Now, because this is an advanced setup, the rules are extra strict. You've got 3 non-negotiables. First, you really want to see this on the daily time frame. It's just more reliable there. Second, like any good setup, it has to happen at a key level you've already marked on your chart. And third, for the strongest signal, you want to see that pin bar close back inside the range of the inside bar. That really seals the deal on the rejection. So, look, a pin bar isn't just some random flicker on your screen. It's a clue. It's a footprint from a battle between buyers and sellers, and it tells this amazing story about who won. And the cool thing is, these patterns are happening right now, every single day, on every chart you look at. Now you know how to see it. You know how to read the story it tells. So the real question is, what are you going to do about it?